Well, welcome to today's launch of the GFCI, the Global Financial Centres Index, edition 34. We're very pleased today to bring together colleagues in London and Hong Kong, and also Jochen, who is with us today from Dublin, I think, Jochen. So very good to be with you today. I'm going to ask Michael Mullally to take the chair for the first section of the webinar, and then I'll see you later to present the results of the GFCI on this edition. Over to you, Michael.
Well, thank you very much, Mike. Well, first thing is just to have a quick look at the agenda today. We've got a short introduction from me. We're going to be looking to a discussion with King and Jochen about the role of future financial centers. Mike, as he mentioned, will be presenting the results, and then we'll have some observations. But may I suggest, folks, you're very welcome to provide comments, questions, and answers if you've got any to some of the discussion points, and we've got about 10 minutes for that. Anyway, we are thoroughly delighted to be here launching GFCI 34. Who ever thought when we began this project 19 years ago that we would be here today looking at it. The first edition was published, as many of you will know, in March of 2007, but the project actually began in 2005 as we were working to explore how to evaluate financial centers. Over the years, many things have occurred. Most importantly, of course, has been very much the rise of Asia, and in particular the rise of China, but also the huge shift from traditional financial centers into tech centers. And we'll be seeing that as we move along through here. Now, what I wanted to do in a way was to just to get the conversation going, turn to our two colleagues, Jochen and King. Jochen, if you wouldn't mind, could you explain? You're there with the World Association of International Financial Centers. How do you see this area as we look at it?
Yeah, first of all, maybe if you don't mind, a few words on us. These days we celebrate our 5-year anniversary. We started before the pandemic in 2018 with 11 financial centers. Now we comprise, you see here the world map, 29 financial centers across 5 continents. And yeah, we focus on the collaborative work between financial centers, but also on exchanging best practices. You know, they are the larger, the smaller financial centers, and yeah, they need to learn from each other and not in each and every time reinvent the wheel. We help with this, from sustainable finance, digital transformation, up to financial regulation, and all those social changes also the financial centers face, and they have to react on, or hopefully be proactive.
Great. King, we have a lot of categories here. We talk about, I frequently distinguish a global financial center, believe it or not, from an international one. Global is where I believe people will do business even if there's no domestic component. We've got international financial centers, we've got regional centers. How does Hong Kong fit into such categorizations?
That's a great question. We would like to think of ourselves as a global financial center, but maybe I will take us back 30 years when the first H shares, that is mainland Chinese company, got listed on the Hong Kong Stock Exchange. That was really the transformational year for Hong Kong, exactly 30 years ago. Since then, we have become a conduit between the mainland China and the rest of the world. Starting off as a fundraising hub for mainland China, but over the years we have expanded that into many Connect schemes. I'm sure many of you know of them, like Equity Connect, Bond Connect, Mutual Fund Connect, ETF Connect, and even lately Private Fund Connect. Basically, to me, a financial center needs to have both breadth and depth. It is about breadth of product variety and investor base. It is also about depth of talent pool and market liquidity. So it is our goal to broaden market access and risk management tools, such as the recent launch of catastrophe bonds in Hong Kong, to better serve the real economy and all the stakeholders. So that's why some of the topics that Johan mentioned earlier, like digital finance, sustainable finance, are very important to us.
Okay. Jochen, I mean, you represent a group, we have a group which overlaps in Vantage. I mean, in both cases, as you look across it, there actually are quite a few common elements, you know, initiatives, opportunities, and challenges across the various centers. Obviously, you know, people want to talk about fintech. Obviously, they want to talk about green. Obviously, and to some degree, this makes a lot of sense because financial centers only work if they're working together. So that if I'm going to do a green transaction with you, then we both have to have green. You see, so there's a kind of a commonality to it. And on the other hand, people want to specialize and differentiate themselves. What do you see as the common challenges to your members?
I think we have a number of large-scale topics, and you have mentioned a few of them, which all of our members facing. On the other hand, there's a specific domestic environment, and they need to decide what they want to address. First and foremost, financial centers, you know, they're physical clusters. They're there for financing the economy, and this is first the national economy. But of course, some financial centers have grown beyond the national economy. Our member Hong Kong is a good example for this, and they have an international element, and they're international financial centers in that way. But in terms of the challenges and also the opportunities we face, I think back roughly a year ago, Mike, we were, you know, jointly drafting a white paper on the future of financial centers, also together with our member DFC, Dubai International Financial Center. And we were thinking how financial centers might look like in 2030. And now, you know, I feel everything has accelerated again, right? So I give you one example. We were thinking about the impact of artificial intelligence on finance, but we weren't thinking, you know, generative AI would progress so fast. Now we have all the ChatGPT and all those clones, and it's you know, really extraordinary the development in that space, and this definitely will have a large impact on financial centers. We have just started a webinar series on this to think about. So some developments really go fast. And the other big topic, of course, is sustainable finance, which is first and foremost climate finance. We need to reduce the carbon emissions globally, but also transition finance. We need to help our corporates to finance their change in the production process, which requires lots of capital investment. And then there are more topics. You know, we need to support the circular economy. We cannot go on with the current way of economic development, at least not forever, because the resources of our planet are limited. And also biodiversity, which we need to protect by all means. It's maybe not that urgent as climate change, but we also cannot wait too long. And this all requires, again, you know, really significant investments. And also we need to involve the financial industry and the businesses in that. So I think this is maybe the largest challenge. As I said, there are also social challenges. Some of our members have aging populations behind, which requires joint action with their governments and many more. But I think these are maybe the most pressing issues: sustainable finance and the digital transformation.
Well, that's very clear. And I guess that's one of the things about running a global financial center. The problems of the globe are on your doorstep. So King, how do you, you know, because we're looking at this in that great macroeconomic helicopter view that WAIFC and Zien have, but you know, you're there in Hong Kong in the thick of it. How are you coping with these challenges and opportunities?
Yes, there are quite a lot of opportunities, but as well as challenges. We have to recognize that the world is becoming more multipolar. So Hong Kong as an international financial center is really used to dealing with uncertainties. So we have been through many cycles over the years. You know, luckily, every time we've come out stronger and fitter. So with the complex environment that we are in now, I think what we need to emphasize is connectivity. So that's why I think WAIFC is very important. As Johan mentioned, now we have 29 members. We would love to expand that network because through this network, we can share best practices and we can also learn from each other. So take Hong Kong as an example. I highlighted earlier, we started off as really a fundraising center for the mainland economy. But now going forward, we see at least 4 or 5 different growth engines that will further accelerate us as a global center. Like take wealth management as an example. I don't know whether many people realize this. Hong Kong is actually ranked ahead of New York as a city with the most ultra high net worth population in the world, and way ahead of other cities in the region. And also green tech and green finance. You may say Hong Kong is such a small place, 8 million people. No. But actually, we have more than 100 green tech startups in Hong Kong, mainly because we have a huge potential market right next door, right, the mainland China. And then green finance, we also leading in this field. We've set some benchmark issues, some of the longest duration green bond, 30 years, right, here in the region and in the world for that matter. And then the other growth engine is digital assets. We are one of the leading centers that have a holistic regulatory framework now for cryptos, but we look well beyond crypto. We're really looking at the blockchain technology. That's why the Hong Kong government became the first government in the world to issue tokenized green bond in January. And then we are issuing e-Hong Kong dollar very soon and stablecoin regulation. And then innovation and fintech is another driver. And last but not least, we are the largest offshore renminbi center and potentially can become fundraising hub for Belt and Road countries as well, just as what we've done for mainland China 30 years ago. So lots of challenges, but also a lot of exciting opportunities ahead.
Well, just before I turn to Mike, I'd like to challenge both of you quickly. Would you mind starting with Jochen? Just what's your most optimistic thing and what's your most pessimistic thing before we head over? So Jochen.
My most optimistic thing is, and this is also an area which I like a lot, is fintech, financial technology. I see the young startups addressing one issue after another, and in many cases much better than the traditional financial industry.
Okay.
This brings innovation and maybe will help us to solve some of the issues. Most pessimistic, King has mentioned, we are moving into less collaboration at least on a political level between all the countries worldwide. My gut feeling was better before. At the World Alliance or between the financial center, this is still different. We're a big family. There's of course an element of competition here and there, but we support each other because we have the feeling this is necessary. Because the issues we address doesn't make sense where we save this ton of CO2 emissions, whether it's in Hong Kong, in China, in Europe, or in the US, right? So, but we have to do it, and we need that joint approach. So I'm very grateful for all the support we have, and hope we can work in a good way together.
Right. And King, your thoughts on that?
Yeah, I echo what Jochen just said. I think that's why I keep mentioning the importance of WAIFC is the connectivity. There are common goals out there that we all want to work towards, such as climate change is a real issue for everyone. What I would like to bring out another hurdle for us is the balancing regulation versus innovation. There are a lot of very innovative startups, at least I've come across in Hong Kong. But the problem is that we have a lot of legacy in the system. So it's very difficult to bring out these new innovative ideas into the real financial market, into the market. So we need some kind of policy, like public-private partnership, perhaps, to help bring out some of these innovative ideas into the open.
Wonderful. Well, we've come to time. Gentlemen, if you want to turn your cameras off, we're going to hand over to Mike for 15 minutes, and then we'll come back for a group discussion. Those of you who are watching and listening, you are part of this, so please do type any questions or comments into the GoToWebinar chat button. Mike and I and King and Jochen are here on GoTo. Any questions we don't get time for, Mike will pick up and answer as well. So just feel free to participate. But now, Mike, the floor is very much yours. I guess you won't do this in Miss World Order, but you know, what are the results?
Well, thank you very much indeed. And indeed, I won't do the results straight away. Of course, I've got some introductory remarks. For those of you who don't know me, I'm Mike Wardle. I'm the Chief Executive Officer at ZN and the lead author on the Global Financial Centres Index. The first thing to say and to mention is that the GFCI is part of ZN's Long Finance Programme, which is really looking at exploring finance, economics, sustainability and technology over the longer term. Financial centre development, we believe, is a very important part of the future and the way that we continue to develop the financial system going forwards. The GFCI is a factor assessment index. It uses two distinct data sets. First of all, survey data, where financial professionals rate centres that they know something about. Second, over 140 quantitative measures. And the methodology we use uses the survey results, provided those who rate cities for their performance, to give a weighting to the quantitative factors. We don't ourselves weight the quantitative measures. We use the survey results through a machine learning algorithm to do that weighting. And the GFCI world is now tracking 121 centres across the world, as you'll see on the map, and we're keeping an eye on 11 other centres who are developing, and we think will enter the index in due course. This is Michael mentioned the beginnings of the GFCI, and in GFCI 1 we were tracking 46 centres, and the real sort of message from this is that the development of new financial centres continues, but with both centres arising in countries with existing expertise, with new centres arising, and countries who want to develop an international presence where they haven't had one traditionally. So we continue to see the rise of financial centres doing international finance, and we'll continue to track that development. By way of the people who respond to our survey, we have a broad mix by sector within the finance world. In terms of geography, people in Asia Pacific make up the largest group of respondents, and we're very grateful for all of those who participate in our index work. So now to the headlines. The top 20 centres in GFCI 34 are shown in this table. There's a good deal of stability in the rankings at the top of the table, but just noting Geneva has moved up 13 places in this edition of the index to move just into the top 10. Hong Kong remains in 4th position, just 1 point behind Singapore, only 3 points behind London. So very close clustering at the top of the table, but with New York having a clear lead. In terms of the headline results, I've mentioned the leading centres, and that's clear. Washington has come back into the top 10 in this edition, while Seoul has gone down to 11th and Boston has fallen a bit. But as I say, there's still quite a lot of stability at the top of the table. The average rating of centres in the index rose just over 3.5% compared with the last edition of GFCI. This suggests growing confidence in financial centres and the world economy, notwithstanding the global challenges that we all know about. So it's very interesting that people are still putting their faith and confidence in financial centres, notwithstanding some of those difficulties. US centres perform particularly well. 5 US centres in the top 10, reflecting, I think, the strength of the US economy. Leading Chinese centres were stable in the rankings. And we did a piece of work for this edition of the index, asking people about the strategies that are required for ensuring the future strength of talent in the financial sector. And the most important one of those, and Michael will talk about this a bit further on, was continuing professional development. We also published, as you will know, a FinTech ranking alongside the main GFCI rating. And in that ranking, New York also takes 1st place. London takes 2nd place in this edition, overtaking San Francisco. Shenzhen maintained its 4th place in the table. Just looking at regional performance over time, on this measure, there's been a narrowing of the gap between regions. North America retains its slight lead over Asia Pacific and Western Europe, but the main message here is that over time the gap in performance between the top centres in each region has narrowed. And just looking at the top 5 centres, New York's lead is slightly smaller than in GFCI 33, but it's still significant. And the following centres are neck and neck, with very small differences in ratings separating this leading group. So we continue to see a real competition between financial centres across the sectors. I mentioned that we track fintech performance separately. Again, considerable stability amongst the leading centres, but Frankfurt has gained 7 places on this measure in GFCI 34. And US and Chinese centres really do dominate the top of the table, although London is in there in 2nd place, Singapore in 5th. Just turning to some of the regional analysis, looking at Western Europe. Western Europe has 7 centres in the top 20, and there were notable improvements in the rankings for Geneva and Dublin in GFCI 34. Frankfurt, Luxembourg, Zurich and Berlin also rose in the rankings in this edition, but a solid performance there in Western European centres. Turning to Asia Pacific, again, 7 centres in this region feature in the top 20 globally. Chinese centres perform well alongside Singapore, Seoul, Tokyo and Sydney. Looking at North America, US centres have been performing very strongly over the last 3 editions of the GFCI, with 5 featuring in the world top 10. And just to note that Miami has joined the index for the first time in GFCI 34, ranking 24. In the Middle East and Africa, Dubai and Abu Dhabi continue to lead in the Middle East and Africa, with Casablanca, the leading centre in Africa, 3rd in the region. A number of centres improved strongly in GFCI 34, including Mauritius, up 13 points into the 5th place in the region. Riyadh, Kigali, Kuwait City were also up more than 10 places in the rankings. One of the measures we calculate in the GFCI is reputational advantage. This compares the assessments taken from the GFCI survey, weighted for the age of the assessment, and compares this with the final GFCI rating. And this table shows the 15 centres with the highest reputational advantage. This includes a number of emerging centres, but also some of the high-performing centres in the index. And a high positive advantage on this measure suggests that the reputation of centre may be running ahead of the reality shown by the quantitative measures alone. Reputation is important, but you can run ahead of reality. At the other end of the table are those centres with a negative reputational advantage. In these centres, the quantitative data alone would suggest that they are performing better than their reputation as measured by the survey that we run to underpin the GFCI. So these are places where maybe there's good things happening, but people don't know enough about the strength of the performance of these centres. So there's some way to go. I'm going to hand over now to Michael Manelli for some comments and observations on the data. Michael.
Well, thank you very much, Mike. What we thought we'd do, since we've got the luxury of having King here, is take a little bit of a look in particular at some of the areas of competitiveness. This next slide shows you areas of competitiveness for Hong Kong. Mike, have you got that slide up? There we go. Now what you see here is, I think, quite exciting. You've got Hong Kong demonstrates to me one of the factors we've always said is important, and that's to rise in the index. You have to broaden and deepen at the same time. And so Hong Kong scores 4th in business environment, human capital, financial sector development, and reputation. And you can see here, maybe some work needs to be done on infrastructure. And I say this according to the survey participants. But you see the breadth of Hong Kong. You see the ability to deliver. You can't rise up the rankings without actually handling everything. You can't rise up the rankings by just having a fantastic financial sector. Now, this next slide here gives you also a feel for some of the industry subsectors. Now, here the picture is also equally mixed, but King emphasized some of the things that have been going on in Hong Kong deliberately, particularly in fintech and the regulation of fintech and the blockchains and cryptos, etc. So you can see here that enormous strength that a center like Hong Kong is playing up there with everybody else. Equally, and I think this is this has got something to do with the livability of Hong Kong. The professional services sector is extremely strong there. But again, Hong Kong doesn't score poorly on anything. In fact, you need to score very well across the board. Now, Mike made a point, which this next slide emphasizes, which is how things have been changing. Over the years that we've been doing this, I've noticed a shift. Depending on economic conditions, people are either very interested in the people and how it's going, or they're very interested in the regulation. And we've been moving through a few regulatory phases, but this index swung back quite strongly on the importance of staff. So when you look at the factors affecting choice of location, notice here that just about every one of the 5 top ones is about staffing. The most important was, is there an opportunity for continuing development of staff in firms? They're attracted to that. But equally, it was funding for postgraduate finance degrees, open immigration policies, special immigration arrangements, and tax concessions, but not firm tax concessions to support investment in staff development. So a huge swing here onto people factors and the importance of structural people factors being available to help. For me, well, this makes a lot of sense, but I think it is to some degree a reflection as well of the pandemic. If you don't need staff at the cutting edge, you can probably outsource them, you can have them working from home, you can have things, but if you want people actually in a financial center, the intellectual component of financial centers is being pressed to rise to meet this need. And that's actually something that personally I think I've seen here in London, particularly with firms moving from Canary Wharf back to the city center. They want to see that intellectual vibrancy, the connectivity of the intellect in the center and their ability to develop themselves. Well, those are some remarks from me, but we're now going to turn back to our panel. And we have a number of people online, so please do ask your questions quickly so we get time to answer them. And the first question, I think probably all three could have a go at it. This is from Alina Dolgova, and I think it could equally be addressed by Jochen and King when they come back online. But Mike, perhaps you could start. How does the current process of regionalization of the world economy affect GFCI, and how could it affect the index and financial centers? Mike, if you could stick to the GFCI, then I think King could probably address it from a Hong Kong perspective, and Jochen from a membership perspective. And just to repeat that, how does the current process of regionalization of the world economy affect the index and financial centers?
Yes, I think the thing that we're seeing more of is interconnectivity between financial centers, and one of the things that people are looking at when they assess financial sector performance is how well integrated the centers are with both their regional collaborators and competitors and with international partners. So one of the things that we do look at in the GFCI is connectivity. So we do an analysis of who is rating who in the GFCI survey. So who is rating Hong Kong and who are people in Hong Kong rating, so that we can understand how deep the connectivity are between financial centers. And what we're seeing increasingly is that we can track the centers which are really focused on the region, so that most of the connectivity is with other centers in their area of the world, and those which are developing really strong international links, looking across all sectors and all regions of the world. So I think it's a matter of the GFCI tracking where financial centers are positioning themselves, either as global centers looking across the world, or as being leaders in their particular region, or having some mixed economy between that. And we will be tracking that connectivity as we go forward. And there's a bit more information about that and how we profile centres into global, international or regional in the full report.
As I turn to King, King, just I mean, one thing to ponder is, how true is the fact that there's regionalization going on? Do you agree with Alina's assumption, or do you not see regionalization happening? But if you do, how's it affecting you?
Yeah, I think definitely it's a trend that we are seeing more regionalization. At the same time, the world is still very much connected globally. You look at supply chain diversification. Just look at the relationship between Vietnam and China. Yes, there are a lot of manufacturing low-end jobs have been relocated to Vietnam. But when you look at the trade between Vietnam and mainland China, it's shot through the roof. So in a way, it highlights how connected the world is. There are a lot of materials still have to be provided by mainland China, and China has also moved up the supply chain in terms of quality, in terms of sophistication. So it's no bad thing that we see these kind of regionalization, because then everyone can benefit. But at the same time, I want to highlight is that the world remains connected. There's no way we can really cut out any particular economy for long from each other. So that's why going back to connectivity is really important. So we need to try and work collaboratively to make sure that everyone wins. There's not just a zero-sum game.
Jochen?
I think on one hand, we see a lot of very promising regional developments, right? So if you look at Africa, sub-Saharan Africa, but also North Africa, Alina represents Central Asia, Tashkent, a lot is going on, a lot is to learn from other financial centers. Of course, regional, there's also an element of competition. If we look on a global scale, what worries me a little bit is that financial regulation. Before there was a process of certain harmonization worldwide, globally, right? So, but I think it's more now going in the different directions, and there will be more and more hurdles, like anti-money laundering or so, or sanctions and so on, which might make international trade flows, international financial transaction much more cumbersome, and might exclude certain areas from the global financial world, right? So because maybe AML will be too costly, manual processes, and so on and so forth. Same applies for supply chain, right? We are in the process of greening the supply chains, making them digital, but we need to make sure that nobody is excluded and everybody has access to it. There's no discrimination of certain countries and so on. So I see, I have some concerns in this area, and we need to keep focus on keeping financial regulation balanced and non-discriminatory, and also try to give all countries a chance to connect to the financial system.
Okay, thank you. Well, we've got a number of people also dialing in because of having computer issues or something. But Hugh Mills, who I know works between London and Asia, frequently in Korea and Japan, said he hadn't really thought about Hong Kong as a green center. And now that you've raised it, he's sort of getting the point. He was wondering two things. One from you, King. Could you just expand a little bit about why Hong Kong it should be seen as a green center for finance? And then a question also for you, Jochen. Are financial centers doing enough to address the green issues? So King, over to you.
Yeah, thanks. Because we all know China is the largest carbon emitter in the world. I guess it's a factory of the world. So that's expected. But the government has set a very stringent net zero transition target. So they need a lot of financing. If I remember the figures correctly, estimated by some investment bankers, we're looking at easily 12 to 16 trillion US dollar. So it can't be funded entirely by the government. So that's why Hong Kong, as an international financial center, can help. And we have been developing a green bond market. We've been very active, and we are hoping to link up the mainland carbon market with that of the rest of the world too, because the mainland China just concluded their voluntary carbon market consultation process. So this is, to me, going to be a game changer if we can make that connection happen.
Great. Jochen?
I think we all don't do enough for against climate change, right? So in that sense, would be very arrogant if we say our financial centers, we are doing our job, it's just the others, right? So of course we also need to do more. It starts with capacity building. We need to, you know, empower universities and other players in the educational space to develop talent. We need ESG experts and many other new roles, not only for the financial industry, like fund management and so on, but also for corporates, which are on the other side. They need to do their reporting properly. So otherwise, you know, financial industry cannot work with their data, right? So, but also we need to set the standards. And the financial centers, or maybe even the agencies representing the financial centers and promoting them, they need to play a role in bridging between the financial industry on one hand and the government on the other hand, because yeah, it's good to have someone in between who speaks both languages in a way, but also at the same time bridging between the financial industry and the corporates, right? So because also there are misunderstandings, and we need to explain you know, very precisely what is required, and we also need to be reasonable with our demands. Otherwise, yeah, we can set up lots of reportings, but I don't know whether at the end, you know, this will help a lot, right? So the data quality needs to be right, better less data, but you know, precise data, which helps us to steer. So I think this is a role we have to play, and definitely we have to do more. Also invent new instruments, financial instruments, like King said. So I think, yeah, still a lot to do, unfortunately.
Okay. King, China launched its national emissions trading scheme in July 21. Simon Morris is curious, how has that affected you in Hong Kong? Are you integrated with that, or is that separate, and are you trading it?
No, not trading it at the moment. That's a great question, and that's where, you know, we believe, you know, we can add value and try and connect the mainland market with the rest of the world. There's still a gap in terms of standard, but this again is the competitive advantage of Hong Kong being a conduit. You know, we will try to bridge these different standards, and we have examples of these successful cases like Stock Connect, Bond Connect, and so on. So we're hoping that we can build a Carbon Connect, you know, hopefully, you know, before too long. But that's a huge opportunity for everyone.
Great. Mike, I've got a question for you from Abalobo. He's talking about Glasgow. They had quite a significant reputational disadvantage. You might take an opportunity to explain that, because in some ways I think that the disadvantage is an advantage, but that's me. What can they do about it?
Yeah, the reputational disadvantage effectively means that a financial centre is doing a lot of the right things, and the quantitative data is showing that. But people don't know enough about the centre and what it's doing to give them a rating which is appropriate to where they are. So it's really a marketing issue. It's about outreach from a financial centre such as Glasgow to get more people and to understand what it is they're doing. To come out, if you like, from the shadow of Edinburgh in that particular case. And there's always this question where you have multiple financial centres in a single jurisdiction. You know, London tends to overshadow Edinburgh, but Edinburgh has a very long history of financial services, particularly with Asian partners. Glasgow is a third centre on the British mainland, but is a bit in the shadow. But there's something about how can Glasgow explain its distinctive financial role and the role of its financial services to a global audience in a way that really differentiates it from Edinburgh and London. So it's a marketing kind of issue to get a message out and to get the distinctive nature of Glasgow's financial ecosystem understood by people out in the world.
It's always tough to bring these things to an end with a good question, or but that isn't a trick. And I'm absolutely delighted that the question has popped in, which I think each of the three of you could have a go at as a nice way to close. This is from Hortense Mudenge. Hortense is dialing in from Rwanda. Hello, everyone. Great discussion. I'm dialing in from Rwanda Finance. It's great to see the improvement in the rankings that most centers have made. This huge uplift across the board. Can the panel shed more light on what has influenced that, and what are the trends that you're seeing in your regions? So, you know, we've seen everybody kind of rise, which is interesting because obviously after the financial crisis, all the centers fell. Is there increasing confidence in finance, or is society looking to finance to support more things? Is it just ebullience that pandemic's over? I don't know. So your thoughts would be most welcome. I'll start here with you, Jochen, looking across your membership.
First of all, I think it's a very good time and a good basis to say thank you to both of you, Michael and Mike, for all this great work of over so many years, you know, in providing a benchmarking for financial centers. I can say from my experience that not all of our members are always happy with the results, but I think keeps us agile and competitive. So I think it's quite important to have this half-year, you know, benchmark for the financial centers. I see a lot of positive developments. I've mentioned already regionally. Hortense represents the Kigali International Financial Centers, one of our members, and it's a role model. It's a small but very important country in sub-Saharan Africa, with a very bright future also on the financial center side. So, you know, I see a lot of development coming out of financial technology, of fintech. This is in those areas a very good opportunity to leapfrog in payments and in lending and in many other topics.
King, your thoughts?
Thanks. I think it's good to see that everyone's trying to improve. I think your index has definitely given us the impetus. It's also part of a KPI, but I think it is really useful to know that we are actually learning from each other, trying to up the game. Is friendly competition. I think that's the key. As I alluded to earlier, we want to make the pie bigger. So there are definitely shortcomings that we need to work on, and you know, we look forward to your index and learn, you know, about the areas that we need to you know, put more resources on and you know, maintain some of our competitive advantages.
And Mike, your thoughts?
Yes, I think that there is a growing confidence in financial centres, and I know Hortense was looking particularly at sub-Saharan Africa, and just looking at what's happening, we're seeing international financial centres starting to really flex and develop in that part of the world. So traditionally it was South African centres, but we now have Lagos looking very closely at how to build its reputation and its work. We have you know, Kigali, as mentioned, who've put an enormous amount of effort over the last few years into developing themselves as a modern financial centre, but also trying to leapfrog some of the traditional financial centres and find new ways to do things. When Jochen referred to the work we did last year on the future of financial centres, one of the questions that we were asked at that time was, what's the next development? And we looked at Africa as the place where development may well be taking place, partly because of the growth in trade and the freeing up of trade in Africa through the Pan-Continental Trade Agreement. And just to end on that point, that trade keeps international finance flowing, and as long as we see trade being healthy and being as open as possible, we think there's a great future for financial centres to help solve the challenges that we all face.
That's a good note to close. I mean, with you, Mike, I sometimes think trade gets lost in all of this. We talk about liquidity and exchanges, and we get all fussed about it, but actually the real driver that makes it international is trade. And of course, trade is very much about co-opetition. I need to cooperate and compete at the same time. You know, there can't be just one international financial center, whatever people like to think. So I think that's a good note on which to close. As we do so, may I note, somewhat to my dismay, that we're looking forward to next March for the 35th edition of what started off as just an interesting research project. So always good. I would also like to point out that next month we have the Global Green Finance Index coming out on the 26th of October. So please do go and submit any of the results you'd like there. We have the Smart Centers Index, which is increasingly important as we see the fusion of technology and finance and embedded finance, and that's coming out in November. Again, please go to the Smart Centers Index if you feel that you can assess centers and take the survey there. But most importantly, take the GFCI survey here on the link. And we look forward to seeing all of our teams together over the next few months, but particularly next March for the 35th edition. My thanks to everyone for being here today, and thank you for hosting us on all of this, Mike. And we will now close.
Thank you very much.
Thank you.
Thank you.